John, first of all, to you, sir, there was that downgrade to guidance back in May. I understand you've got an update for us this morning. How have sales been trending ever since?
Yeah, I mean, it's definitely a lot of uncertainty out there right now. A lot of people waiting for the dust to settle. I think people are just looking for certainty, whether it's tariffs or any other economic policy. Our customers are kind of in wait-and-see mode because their end customers who generate freight moves and ultimately freight rates are also in wait-and-see mode. So everybody's just kind of on the sidelines, waiting for some sign of certainty.
And not buying trucks, it looks like you had a drop of 20% in unit sales in the second quarter. Is that, you think, likely to pick up now that we've got this big, beautiful bill and we're starting to see trade deals go out? Or do you expect continued uncertainty to hold back revenue in Q3?
Well, I think there's a lot of interpretation of the big, beautiful bill that needs to happen. And ultimately, like I said, end users who generate freight, they need to figure out if it's good for them in their particular industry. Obviously, our customers are hauling everything from steel to groceries to petroleum to everything. So how the bill impacts each one of those end markets ultimately drives, a segment of our orders. So we'll have to see how that all shakes out. Still, I would say a lot to remaining to be seen. And it's all not just the big, beautiful bill. Also, there's economic policy, and you've been talking about tariffs and other things out there. So there really needs to be, I think, a firming up of economic policy before people understand or realize this is what we have to work forward with, and then we can all adjust and move. But in the meantime, there's the uncertainty just has people frozen.
You have, I don't think a lot of people realize, I think you make more school buses than anybody else in this country. You have a ton of production, obviously, in the United States of America, but also a couple of plants in
Correct.
Mexico. How agile is your supply chain? How easily can you move, Freightliner production back to U.S. plants or up the count of U.S.-made parts in your Mexican-produced trucks?
Yeah, that's a great observation. And we are the nation's largest school bus producer as well. Thomas Built School Buses, which is located about 30 minutes east of where I am right now. We have a number of plants in the U.S. This Cleveland truck plant is our largest heavy-duty truck plant. About an hour north of Charlotte, we have another medium-duty truck plant just west of the Charlotte airport. We've got a parts plant in Gastonia, also by the airport. We've got a custom chassis division located down in Gaffney, South Carolina, just over the border. So we're hugely located center gravity-wise in the Carolinas. But then, as you said, we also have a couple of plants in Mexico. So we're flexible. We can build any of our models in either country. We've really tried to, be as flexible as possible. And certainly, if we ever got into a peak market, we might have to look at expanding some capacity in the U.S. to be able to accommodate that. But certainly today, at the market levels we're at, to move it back and forth is really not so problematic. You also alluded to the supply chain, and that's probably the bigger issue because, a lot of those folks, it's been well documented, the integrated nature of automotive, and we are obviously not cars, but we're part of the automotive industry writ large. There's a huge amount of integration between Canada, Mexico, U.S. in the supply chain, and that takes a lot longer to be able to, to adapt. There's just not too many empty plants sitting around in the U.S. That are currently, up to date with tooling and a workforce, parked outside waiting to go to work. All that stuff takes time. And typically to bring a new plant online or even to refurbish an old one and get it up to today's standards, you're talking 3 years potentially. So it's not an easy problem to solve.
John, in terms of the tariff that gets slapped on your trucks assembled in Mexico that come back here for sale in the U.S. market, the 25% only applies to the non-U.S. produced parts, right? So if you have a truck that's made of 40% non-U.S. sourced parts, that's only like a 10% hit. How much of that can you eat? Because you have pretty fat margins, right? 14, 15% in the trucks business. How much of that tariff can you eat, and how much do you have to pass on in price increases to your customers?
Yeah, so today, obviously, we're USMCA compliant, under the existing regulations. And obviously, there was some discussion still underway by the administration to reopen USMCA. Today, that requires roughly 65% U.S. content, which for our Mexican trucks, we're able to definitely, let's say, bring into line with the powertrain, whether it's engine, transmissions, axles that we ship into Mexico for installation, then ultimately get credited back when they come across the border for some inside baseball. But yeah, you're correct. I mean, there's definitely some inflationary pressure that comes with any kind of tariff. And what that ultimately shakes out to is going to be the nature of what the tariff is. So there's also a competitive landscape to consider as well. Obviously, I think every manufacturer would love to push every dollar of tariff out as fully into the economy as possible, but you've got competitive pressures as well, and we're in a pretty competitive industry. We have some great competitors that we fight tooth and nail with. So how much ability we have to ultimately do that remains to be seen.
I want to come full circle because this really does bring us back to the answer to John's initial question. When you said we're ultimately in wait-and-see mode, we've been trying to quantify what that uncertainty looks like for someone in the C-suite like yourself. What does that mean? Does that mean you're not making certain investments, that you're not making certain hires? Is that the reason why you're buying back stock rather than necessarily investing, say, in autonomous driving capabilities?
So, I mean, we've always felt since we became a separate company in 2021, we've been very bullish on stock buybacks, and we've continued to do that. So that's not a new thing, a new decision that we've made, you know, in reaction to anything else that's going on. That's an independent decision, and we clearly want to make sure that even as we do that, we have other money to pay dividends with and other money to make investments with. So we've obviously thought that through, and we feel like we're fine in any situation there. But yeah, in terms of investments, those typically are more driven by environmental regulations. And there's a lot of change going on there. We haven't talked about that, but there's clearly a lot of change going on. Obviously, the EPA has rolled some things back. California has rolled some things back. And ultimately, that drives a lot of our major investments, because when you talk about bringing engine or ultimately the entire powertrain up to speed in terms of more fuel efficient or lower CO2 or whatever the regulations are, there's a big cost that's associated with that.